Ferrari just dropped 16%. Is it time to buy the dip? In the next few minutes, I'll break down whether Ferrari is a hidden gem right now, why an airline might be one of the best buys on the market, and which two chip stocks just got a major boost from the government. The market is hitting all-time highs, with the Nasdaq breaking 23,000 points for the first time. But while some stocks are flying, others, like Tesla, are falling. So where should you put your money? Let's get into it. Today, Thursday, October 9th, the market is surprisingly stable after a massive week of gains. The S&P 500 just had its 8th bullish day in the last 9 sessions, reaching historical highs. The Nasdaq is also on fire, driven by its tech giants. But this calm surface hides some very interesting movements underneath. Let's start with the biggest shock of the day, Ferrari. The stock plunged 16% after the company issued a cautious forecast. When a company as solid as Ferrari tells the market to temper expectations, investors get scared and sell. But for us, this could be an opportunity. A 16% drop in a single day for a brand like this is rare. This could be the affordable entry point many have been waiting for. The question isn't whether Ferrari is a great company, but whether this price makes it a great investment right now. Moving from luxury cars to banking, there's a fascinating situation in Hong Kong. HSBC is proposing to privatize its subsidiary, Hang Seng Bank. They've made an offer at a significant premium to the current stock price. This means they're willing to pay more than the market thinks it's worth. For Hang Seng shareholders, this creates a clear path. The stock has a strong potential to keep rising until it reaches that offer price. It's a very specific, event-driven opportunity. If you're getting value from this breakdown, take a second to hit that subscribe button. It's free, and you won't miss these daily analyses where we find opportunities like these. Now, let's talk about a company that is absolutely flying, Delta Airlines. Delta just reported third-quarter earnings that beat all expectations. They're seeing incredibly strong demand for travel and are forecasting this will continue into next year. They see no signs of consumers pulling back on spending. The stock jumped on the news, and it looks like it has more room to run. Let's do some simple math. If Delta earns what analysts expect, around $6 per share, and we apply a PE ratio of 15, the stock could be worth $90. Now, what's a PE ratio? It's the price-to-earnings ratio, and it just tells you how much you pay for $1 of the company's profit. A PE of 15 is typical for a healthy company. However, airlines are cyclical stocks. Cyclical stocks are those whose fortunes are tied to the ups and downs of the overall economy. For that reason, some might say a PE of 15 is too high. But even with a more conservative PE of 10, which would value the stock at $60, it's still significantly higher than its current price. It appears to be a clear buy. And speaking of giants, we need to talk about Tesla's current slide, but first, let's look at a new tech battleground that's heating up. There's a lot of talk about smart glasses, with companies like Apple and EssilorLuxottica making moves. But here's the honest truth. It's impossible to know right now who will win this market. The technology is still emerging, and we don't know which product will capture the public's imagination. It's a space to watch, but not one to bet the farm on just yet. However, in a much more established tech sector, there's big news for chip makers. The U.S. government has approved a contract that allows Nvidia and AMD to sell their powerful AI chips to the United Arab Emirates. This is a huge deal. Both stocks are expected to rise on this news. It's a direct catalyst that reinforces their dominance in the AI space. If you're bullish on artificial intelligence, these two companies remain at the center of the action. Now, for the other side of the coin. While the Nasdaq is up, one of its biggest stars is down, Tesla. The stock is falling today. There isn't one single piece of catastrophic news, but it's a reminder that even the most popular stocks have down days. My hope is that if you're not already invested in Tesla, you're being patient and waiting for a significant dip like this to even consider an entry point. Chasing a stock at its peak is a dangerous game. Finally, a quick mention of a household name, Pepsi. They also reported stronger than expected earnings. Their U.S. beverage unit is showing signs of recovery, which is great news. Pepsi is a stable, defensive stock, not as exciting as a high-growth tech company, but a solid performer. So, to recap, the overall market is strong, but the real opportunities are in specific stocks. Ferrari's huge drop could be a gift. Delta is firing on all cylinders, and Nvidia and AMD just got another tailwind. Meanwhile, Tesla is showing some weakness, reminding us that no stock goes up forever. If you found this analysis helpful, make sure you're subscribed to the channel. And now I want to hear from you. What's your next move? Are you buying the Ferrari dip or are you looking at another stock? Let me know in the comments below.